Good afternoon, traders. It's Bill Baruch with Blue Line Futures. It is your daily midday market minute. We're seeing a rally ahead of CPI tomorrow, but before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. Yeah, after a good close yesterday in equity markets, we've seen the E-mini S&P really kind of grind a little higher, and overall, on that open this morning, within that opening bell, we saw our pivot and point of balance levels, 41.32, 41.35, hold through that battle of the opening bell. Now, the NASDAQ has lagged, but the S&P is right back at session highs and really trying to pierce through major three-star resistance, 41.42 to 41.47. This is also the high going back to non-farm payroll. You got some cyclicals really leading here right now. Caterpillar and Deere moving well. You also have consumer discretionary outside of Amazon doing well. And then really sort of a broad move without the tech. Now, because you have the NASDAQ, the E-mini NASDAQ did retest near 13,000, lagging on the session, trying to recoup some of those losses. But it basically opened right around that 13,150 area and sort of battling to try and regain that. Now, major three-star resistance in the NASDAQ is still overhead 13,200. So there's a lot of levels, as I noted in the Morning Express, that this market really has to chew through as we look into CPI tomorrow. But overall, it's been a very nice consolidation, a very healthy consolidation. And if we see inflation come down on those numbers tomorrow, where headline inflation month over month could be about 20 basis points. And if that is confirmed, I think we'll see the market look to make a nice move in response to that as well. The 5.2% year over year number for headline inflation would be the lowest since, I think, going back to July or June of 2021. That would be a really nice relief for the market, but also for the Fed, because if you look to this May 3rd Fed meeting, the CME's Fed Watch tool is saying a 77% probability that the Fed hikes 25 basis points. And yes, all those committee members are out there saying there's more work to do, but I could tell you, I think that if they have a reason to not hike, they're not going to do it, given some of the banking concerns, even though the headlines banking concerns have dissipated. You really don't know what the aftermath is going to bring here in the coming months. And you have to remember that the real thing here is taming inflation. The Fed isn't hiking just to hike and cool the economy. They're really trying to tame inflation. That's the goal here. So if we get these numbers in line or a little better than what's expected, I think we'll see the market react very favorable, and we could see the S&P get back out above 4,200 in response to that CPI. Now, the stock market isn't the only thing moving here. We got crude oil out above $81. There's been a number of positive news flows that have helped that. And I noted on the Morning Express today the new loans data out of China is something that could percolate through the Chinese economy as they reopen and through this summer as a very good positive for commodities, not just crude oil, but also the metals. That's a positive. We also saw data showing from Russian flows down about 1.25 million barrels per day last week, which is the biggest drop-off going back to when there was storms in December. And then on top of that, China Urals imports hit a record high in March. So you had a lot of positive flows, news flows for crude oil this morning. It was very surprising to see that dip below 80, but once we got into the intraday market at 8 a.m. Central Time, crude has really sort of lifted off. And I have another tailwind coming this afternoon, the short-term energy outlook from the EIA saying that non-OPEC supply is expected to drop, so lower than expected. So that is something bringing an afternoon tailwind. But I got to say it, maybe somebody knows the API data coming out at 3:30 p.m. Central Time. Moving on, though, looking into the metals, they're holding fairly well. A nice rebound after yesterday's semi-bloodbath that was saved, stick save for gold at right at 2,000. Copper's back above $4. A lot of this is driven by the currency market. Remember, currencies had low liquidity yesterday due to some of the Easter holidays in Europe. So those comments out of the Bank of Japan, the Governor Ueda, ultimately had more weight on the market than it really could have or should have. But you're seeing gold and silver bouncing back up to resistance levels. All of those are highlighted on the Morning Express. And it's going to be all about CPI tomorrow. And our team is here to help. So don't hesitate to reach out. 312-278-0500. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.